Ratings changes rankle shares of Radio Shack and Netflix. Let's talk to Reuters markets man Ryan Vlastelica. Okay, Ryan, let's get right to Netflix. Watching the shares of Netflix, I feel like I'm riding a mechanical bull.
Right.
Up, down, it's crazy. All right, let's talk about B of A Merrill downgrading the stock to underperform. Down over 8% today. This is after yesterday when Morgan Stanley upgraded the stock.
Right. Well, Bank of America is actually coming in a bit late. Netflix shares have fallen from a high of well over $300 to about $60 right now. So it's a one-time trading favorite that's really sort of losing a lot of its momentum. A lot of questions about competition, a lot of questions about subscriber growth, and not only subscriber growth, but what plan are these subscribers going to get? Is it going to be the more profitable DVD by mail service or just a streaming service? A lot of questions like this going around in a lot of other major companies, including Amazon. Apple is sort of getting into it. These streaming programs, is that going to be enough for people to stay with Netflix? Or are they going to go somewhere else? A lot of questions, and the stock has really been taking a pounding because of it.
I know, such a cool story to watch, I think, because as we know, as you mentioned, we know that younger viewers are migrating from traditional TV over to the web. But how many subscribers are they going to get? And then, of course, the news today that Amazon, notoriously cheap Amazon, teed up Epix pretty nicely in their deal to get their content, get their inventory financially. It's a very sweet deal for Epix, and they've linked it, of course, to the Prime service and growth in their Prime. If they can prove that they've added more Amazon Prime subscribers, that's going to help Epix as well.
Right.
So Amazon, showing that there, in fact, are real competition to Netflix.
Right. No, we can move on. we can keep talking about that, but we'll move on.
All right, Radio Shack. Let's talk about Radio Shack because B of A Merrill, again, upgrades to buy, and the price target is gone from $2 to $2.50.
Right. Of course, Radio Shack has been another company that's really sort of taking a beating over the past couple of years. It used to be sort of a cool, popular store, and now it's sort of a joke. Shares have really just taken a nosedive.
I will defend Radio Shack.
Over the past several years. As have Best Buy, as of other electronics retailers, again, as people are migrating to companies like Amazon, Walmart, other online big box retailers. Basically, the stocks come down enough. A lot of people see bargains in there. People keep trying to short the stock, and that could create a short squeeze.
Right.
They just changed their top management. That could be enough to at least inspire some new confidence. They have a lot of assets with all their big box stores and merchandise and so forth. So there are still reasons to be positive about the stock. But when you're talking about a $2 stock going to $2.50, it's a big percentage move, but it's not a big price move. It doesn't really indicate really strong, healthy growth in the long term for Radio Shack.
All right, regardless, we will mention that they're up 9% today. All right, let's move on to Intel. Bernstein cuts to underperform. They're down 2.5% today.
Right, this is the big one, at least as far as broader markets go today, because of course Intel is a bellwether stock. It's very important not only for the chip space, but the tech space in general. There was Robert W. Baird that cut their price target, and also Bernstein, similar. Both are citing concerns about demand for netbooks and so forth. Could be another driver. Just, again, going to the tech space in general, people looking for smartphones and tablets and so forth. So these other product categories aren't as popular, and that's a major source of revenue and profits for a company like Intel. So this is just another reason to be cautious about that product segment.
All right, let's stay on the tech beat and the company that we talk about every day, pretty much. Apple, Nomura Equity Research started coverage with a neutral rating and a modest kind of $710 price target there, and Apple reacting down 1.5% today. Now, we're going to go back and look at the major market board here, and as we do, we'll mention, obviously, that dragging down the NASDAQ today are Intel and Apple.
Right, absolutely. NASDAQ, very tech-heavy, and you can see the losses there are much more significant than the ones in the S&P and Dow, though those are down pretty solidly themselves. As usual, we are looking again to Europe for just a broader market perspective.
Right.
Bad news today is the IMF cut its growth outlook for 2012, which is just another sign of caution. People are very concerned about global growth, especially with China slowing and questions about Europe possibly going into a recession. How is that going to impact us here? Today, the impact is not good. And of course, Greece continues to be in turmoil. You can see the riots there, just getting very ugly.
Angela Merkel visiting, yes.
Absolutely.
Well, yeah.
Concerning stuff to see. No investor wants to see this, and that's just enough for investors to take some profits, especially since we recently hit 5-year highs just reason for us is to step back a little bit.
And the euro down and sliding against the dollar today as well.
And the 10-year is up a little bit. So again, not surprising to see in times when people are looking for a little bit of safety.
Okay, let's move on to earnings because we have some big earnings coming out after the bell today. But before we mention that, we've had, of course, big time profit warnings from major companies. We've heard from FedEx, HP, Applied Materials, Caterpillar, projecting gloom and doom through 2015, and Thomson Reuters data forecasting a 2.4% drop from 1 year ago, third quarter. This would be the first earnings decline in 3 years. However, let's be optimistic because we did talk to earlier today. We spoke to Sri Raman. He's a Thomson Reuters senior analyst, as I mentioned earlier. So let's hear what he has to say.
The bright spot is that the consumer discretionary is expected to grow almost 8%, 7.8% this quarter. That's a great sign for the economy. Consumers accounts for 75% of the U.S. economy. As long as you have good products, consumers are going to go and buy it. Look at Gap, Apple. Both of these have positive predicted surprise earnings growth. That's a great sign for the economy.
All right, let's move on to two big companies we know coming up. Alcoa after the bell. What do you predict?
Well, this is really the unofficial start of earnings season, so it carries a lot more weight than perhaps a company is worth considering its size. It is a Dow component, but it's one of the smaller ones. It's one of the less influential ones. Of course, a material company in the aluminum space. Right now, the company is expected to post a profit this quarter. Metal prices have been falling lately. That's going to hurt the company, but at the same time, it's doing pretty well in its transportation and aerospace divisions. That's going to be a good thing. However, this is sort of seen as setting the tone for earnings season. So if they do better than expected, that's going to be at least a positive in terms of a market psychosis. If not, it could be a real negative beyond really what the results actually are. Moving on to Yum. The main thing to watch out here is going to be its strength in Asia.
Of course, KFC, Taco Bell.
KFC, Taco Bell, all these big fast food chains.
Pizza Hut.
Right. Global expansion is major for all of these companies, so look to see how well they do in Asia to see just a sort of a gauge of how growth is doing there, consumer spending, especially discretionary spending, which is what this company really is. That's going to give us a sign just for the global health at large, at least for one segment of it in terms of people eating out and so forth. Do they have enough money to at least do that? So that's what people are really looking for here. Right now, Yum is down a little bit on the day. Alcoa is about flat, so obviously investors are just sort of playing a wait-and-see game, just looking to see what comes out for sure after the bell.
Global health at large. Funny when we're talking about KFC and Taco Bell. Hey, but you know what? Tastes good. All right, Ryan Plastelka, thanks so much. Remember, follow us on Twitter at Reuters Insider and check out our YouTube channel. That is Reuters.com/ReutersTV. I'm Lisa Bernhardt. This is Reuters.